All right, all right. Hello, everyone. Hope you can see me and hear me. Sorry, we are a couple of minutes late, but we're ready to rock and roll. Cool. I'm just still setting up some of the tech stuff, so I apologize. Give me a second. But I'm still here with you. Let's see. Give me 1 second. I just want to make sure Mariana is all set up here so that she can read out your questions. Oh, cool. I thought I lost you guys. Thank you, Mariana. Got tea also coming. Thank you so much. Getting prepared, right? I gotta have my tea before I do live with you guys. All right. Running a little bit behind schedule today. All right, cool. We got tons of questions coming in. Awesome. Welcome. This is a live Q&A. You guys can ask me any tax questions. I'm here to help business owners to save money on taxes the right way, okay? The right and the legal way. All right, cool. Let's get ready. Let me know in the chat if you guys can hear me. Let me know in the chat if you guys can hear me, can see my board. I would love it if somebody participates today and let me know. Can we have some of the books that we're going to give out, Mariana? All right, talk to me. Yes, you can hear me. Scholar Shield legal documents. What is your first name, Scholar Shield? Life Caddy. What is your first name? Let me know what your first name is. Loud and clear. Laura. All right. Why do you have guys? No, sorry. What is that? Oh, that's Laura. There you go. Scholar Shield Legal. Perfect. Hi, Laura. All right, cool. Can hear and see. Perfect. By the way, go ahead and like and heart this video. Those of you that will participate the most today, okay, we're going to send you free copy of Thinking Outside the Tax Box and S Corporation Tax Secrets book. Today we're not sending 2 copies of the books, okay? Today we're just picking the winner. 3 winners. One will get this book, another one will get this book. Just to keep you coming till next week to see if you're going to win again next week, okay? Now, in order for you to do that, thank you, Hung. In order for you to get this, you have to participate. The participation is to help yourself. Ask questions, okay? Ask me any tax questions. The more questions you ask, the more chance you have of Mariana, who's sitting right here. Mariana, say hello.
Hi.
Can everybody hear Mariana? Say you can hear Mariana. She will pick the winner because she's going to be reading out the questions. Big fan of the channel. Glenn, I finally got you when live. All right. What is your first name, by the way? Okay, tell us your first name. Perfect.
I think it's Richie.
All right, cool. Let's get started. Let's turn some PCs. Cool. Yeah, it's getting hot here. All right, cool. All right, guys. Start putting down your questions in the chat. We're going to go in order. We have some questions that came in before. Mariana is going to read it out, but only if you're here. Mariana, I'll be right. Hold on, guys. I'll be right back.
Hey, everyone. Keep the questions coming.
All right, cool. Let's get started. We got questions coming in. Mariana, take it away.
All right. First question is from Laura. If I change from a sole proprietor to an LLC on October 1st, 2023, and elect an S Corp status, then go on payroll for the last quarter, how do I report my income for 2023? Schedule C, W-2, or everything on W-2?
Everybody should pay attention to Laura's question. Everybody should pay attention to Laura's question. That's a bomb question. Okay. So this is Laura, right? So Laura, hello again, Laura. Give us a heart, give us a like, okay? By the way, for those of you that are watching replay, put in your questions. We participate in the comment section on the replay. We will also pick out a winner for the book as well. All right, so Laura is saying, all right, great question, okay? Laura is saying, Boris, I am a sole prop, and in October, I will become an LLC, okay? And then you guys can see my board. And after I become an LLC, I'm going to elect an S corporation status. How do I report my taxes? This is actually a great question. anytime you're starting a new business, you don't have to right away be an S corporation. Okay, that usually depends on how much money you've made in your profits. We, in my firm, we recommend to our clients an $80,000 profit is probably a sweet spot for you to become an S corporation. Now, Laura says, "Hey, Boris, I'm making enough money. I now want to become an LLC and an S corp." Now, what you should have done in the past is become an LLC right away, because when you reach that level in October, for example, you can elect an S corporation status, and it will count as if you had S corporation for the whole year. But because Laura was a sole proprietor before October, you have to file your taxes January to September 30th, right? September 30th on Schedule C. Okay, so any income reported as a sole proprietor will be reported from January till September. Any income from October 1 to December, including a salary for yourself based on the income that you made between October and December, will be reported on 1120S, which is S corporation tax return. Next question.
We have a question from Erin. Can
Distributions. Yeah, I think she meant distributions. Let's do it.
Can distributions, not salary, be given throughout the year from the S corp or only at the end of the year?
Great question. So Erin is asking, "Hey, Boris, I've got an S corporation. I'm taking distributions out from the business, including my salary. Do I have to take these distributions at the end of the year one time, or can I do it on a monthly basis?" You can certainly set up to take out distributions any way you want: weekly, bi-weekly, monthly, annually, semi-monthly. What I strongly recommend is that in your corporate minutes, which doesn't get filed with the IRS or anywhere, just record it. "Hey, the board of directors met," which is probably you and yourself, "and we made a decision that the shareholder is going to pay himself a distribution on a monthly or semi-monthly basis." Sign it and put it away, that document, and just follow the rules of that document that you have created for yourself. Next question.
Craig asks, "I own a rental property inside of an LLC in Tennessee. Can I break up the LLC and move the property to my own name?"
You certainly can. I just would want to know why you would want to do that. So let us know in the comments. We'll get to it later. Next question.
Second. Okay, question from Ashley.
Ashley, what's up, Ashley? Say hello in the chat, please.
"I'm a 1099 employee through someone else's LLC. What am I able to write off for tax purposes, and what is the best way to do my taxes for this year?"
Okay, Ashley, everybody pay attention to Ashley's question. Everybody pay attention to Ashley's question. Okay? Cool. So Ashley says, right, this is Ashley. By the way, for those of you that just joined us, we're picking 2 winners today, okay? The only participation you have to do is just ask tax questions so I can teach you how to save money on taxes and really pay less in taxes. Now, we're going to pick a winner. We're going to mail you this book that is currently on Amazon for $20, and this book that we're currently selling online for like $9. We're going to pick a winner. There's a winner that's going to win this book or this book. Participate with your questions. Ashley is asking a bomb question, okay? Ashley saying, "Boris, number one, I'm a 1099 employee, okay? I'm a 1099 employee. Now, what expenses can I take as a 1099 employee, and at what point does it make sense for being an entity?" I think that's what you asked, right? That she said, at what sense does it make to be an entity?
She's an employee through someone else's LLC. She wants to know what she can write off for tax purposes and the best way to do my taxes for this year.
Got it. Ashley, can you clarify, are you a 1099 employee or are you a W-2 employee? Because every time you say employee...
No, I'm a 1099 employee through someone else's LLC.
You're a 1099 employee. Okay, so you're pretty much a contractor. So if you get paid at 1099, remember this, ladies and gentlemen, I don't care what entity you are, whether a sole proprietor, an S corporation, a C corporation, an LLC, whatever that may be, if you are earning self-employment income, all expenses that you would normally be able to write off under a corporation can still be written off on your personal taxes against your 1099 income using Schedule C. So Ashley, in your case, there's a number of expenses that you can use for yourself, okay? Travel, home office, travel, home office. We also got any supplies that you buy for the business, anything that you do that you use to make that income happen, any supplies and materials, right? So let's say supplies, computer, laptop, internet. You can also put money away into retirement. You have options of 2 retirement accounts. You can do SEP IRA, or if you're really making like a really high 1099 income and look, you know what, I want to be able to put away a little bit more money, then you put it into solo 401k. Okay. Now, what I want you to think about is that, hey, I'm making 1099. This goes back to the thing that I was answering Laura. Are you going to be a 1099 income for a long time, and is this your thing going to be going forward? Like you're going to have your own business. If that's the case, I strongly recommend opening it as single member LLC. For IRS purposes, single member LLC is considered just like a sole proprietor. So you don't have to file any separate taxes or anything of that sort. But when you start reaching certain income limits, becoming an S corporation could be very beneficial for you. And then that will count as if you're an S corporation for the entire year. Okay? So if you're a 1099 employee and you will make $80,000 in net profit, now again, in most states, being an S corporation is very, very beneficial. Like I said, in my firm, based on our calculation, to save clients money on taxes after all the fees that goes with a tax with an S corporation, the good sweet spot to start saving money is net profit of $80,000. Some states actually penalize you for being an S corporation. For example, in New York City, like we've got a state and we've got the city, right, where our office is at. If you're an S corporation, you get a boot in the butt. Okay, they make you pay extra 9%. They said no. We don't recognize S corporations. Tennessee, I think, is another state. So very few states. You may want to make sure that your state doesn't tax you extra on an S corporation. A lot of accountants don't talk about it. I also don't talk about it too much because like 95% of states, I think, or 90% of states don't have that, but very few do. So double check on that. But regardless of where you are, you want to make sure you become a single member LLC. So when it's time for you to make an entity election, whether it's an S corporation or C corporation, whatever that may be, that will help you the most money on taxes, then you can easily convert an LLC. Remember, in order for you to be able to save money on taxes, you got to start working with a tax advisor. Now, these videos that I do here for you and answering your questions, it's great. Don't take it and run with it. This is to give you general knowledge and idea of where you should be at. All of the implementations and all the compliances must be done with a tax advisor that is strategic, proactive, and speaks to you on a consistent basis, not once a year. Next question.
Question from Erin. I have an S corp. It's my primary income. Is it okay to have a small W-2 side job, or will that complicate things?
It's not going to complicate things. That's a question from whom? Erin. I'm not going to get too technical. I'll try to explain this to you guys so it doesn't confuse you, because this is now just accounting technicality, accounting geek stuff that I'm going to get into, okay? And I'm a tax and accounting geek, okay? So, like, I don't know. Like, I don't know.
Change the name?
Oh, yeah, it's Erin. Can you stop telling me what to do at work? At home, you tell me what to do, not at work. I'm just kidding. Okay, cool. Erin says, Boris, I have an S corporation, right? By the way, Erin, can you say hello in the chat? Say hello, like it, heart this video. Okay. Erin says, I have an S corporation. Number 2, I get a W-2 from my S corporation. Now, Boris, if I get a side job, right? If I get another income, is it going to complicate things for me? I actually have good news for you. It's not. So let's say W-2 from another job. And everybody should be listening to this, because there's some of you that have a business and there's a company that wants to hire you as a consultant, not on a 1099. They don't want to pay your business, but like, you know what? We'll put you on a W-2. And you're like, am I going to end up paying more taxes? Look how much IRS loves you. Check this out. Okay. So I'm going to give an example. We're going to use 2023 numbers. All right, cool. So I'm just going to put this number one here. I think it's $160,700. Don't quote me. I'm just going to round it to 160,000. Okay. I am going to tell you what that number is. Okay. Now, let's say Aaron is making the W-2 from his business. Aaron, I'm going to assume you're making $100,000. Okay. from your business. Then you've got another job that is offering you, like, Aaron, we're going to pay $120,000. So you're like, all right, cool. So now you're making $220,000, okay? So technically speaking, you have to pay Social Security, Medicare taxes from your job, and you have the W-2 that you get from your job, and the Social Security, Medicare taxes from this other W-2 job. But the IRS says, hold on a second, Aaron, we love you. You do not have to overpay Social Security, Medicare taxes. If you hit this threshold, which is $160,000, I'm rounding it, okay? I think it's like 160,700. If you hit this threshold, whatever you overpay in Social Security taxes, which is 6.2%, we'll just refund it to you. So when you file your 1040 taxes, your 1040 personal income taxes, and you don't need a genius accountant to do this because usually softwares calculate these things, but you will be surprised how many times an accountant can actually miss properly entering the W-2 so that the software can read that you overpaid the Social Security taxes, okay? So whatever accountant you work with, let's say you don't want to work with a tax advisor, you work with a tax preparer, ask him one question. Do you have somebody in your company that reviews tax returns? Like there's always second set of eyes, because remember, accountants are working with millions and millions of numbers during tax season. Sometimes they're on the crunch and they're like, putting things in, right? In our firm, we actually have two-step review process, okay? Two-step review process. Why? We're all human. We all could make a little mistake or whatever that is. Two-step review process. Why? Because things like this happen, okay? So when they properly enter this information, then you're going to get a refund for the overpayment. So in this case, the overpayment would be 6.2% on a $60,000. And that's about $3,600 refund back to you. I hope that was helpful, Aaron. Love the video if this was helpful. Yeah. Next one.
From Jason.
Jason. Hello, Jason. Say hello in the chat, Jason, please.
I have an S corp and I'm curious about Section 530 relief and if that would mean I can just file for myself as 1099 and not employee.
You know, I look like a genius. I sound like a genius. I wear my glasses. It makes me look smart. Remind me what Section 530 is, please. Next question while you remind me.
Whoa. Okay.
Somebody said something nasty.
I don't know. I'm not checking.
Why? Let's read it. We love nasty comments.
No, I don't. Question from Lloyd.
Okay.
I have a business-owned boat for rental. It is based at my house. The dock is in need for repair. That is safety-related, trips and falls. With customer on the dock, could repairs be a business expense?
Yeah, reread the question. Sorry, just a little louder.
I have a business-owned boat for rentals. It's based at my house. The dock is in need for repairs, which is related to safety. With customers on the, related to safety for the customers on the dock, could repairs be a business expense?
Yeah, so if I understand you correctly, this is Lloyd, right?
Yeah.
Lloyd, say hello in the chat. Okay, so Lloyd is saying, Boris, I have a business that owns a boat that is being used for the business. We already established that the boat is being used for the business. The boat is parked at the dock of his house. The dock needs repairs. Are the repairs of the dock tax deductible? The answer is yes, and they're fully tax deductible if the boat is being used fully for the business. So that means the only purpose of the dock there is to hold that business boat. So it would be fully deductible. Now, if the boat, for whatever reason, right, is not 100% used for the business, then you only write off the portion of the dock repairs, whatever is the boat being used for the business. Let me know if that was helpful. Mariana, let's go.
Laura is saying bummer, but this makes sense. Thank you.
You're welcome.
Richie, home office deductions mention
exclusive use. Yes, who's
for
that?
Business.
Richie? Richie, say hello in the chat. Yeah.
Mentions exclusively being used for business, but are you able to claim it if 100% of my business income is generated on the same office I use for personal purposes?
So Richie is asking a good question. I just had to process it in my head. Okay, Richie. Okay, Richie is saying, Boris, home office use must be exclusive. Meaning, right? So let's talk about that for a second. Like, I've talked to business owners like, yeah, my home office is just my kitchen counter. In the morning, put my laptop, boom, take my coffee out, and I work the whole day out of there, Boris. Whole day. I'm telling you, my kitchen, on the counter, in the middle, like, that little nice island that Mariana still dreams to have. We don't have a kitchen island at home. I'm like, you don't need it. She's like, well, you're not in the kitchen. But anyways, so he said, hey, I work out of the kitchen island, right? So that's not deductible because it's not exclusive use. So Richie is saying, Boris, all my income is generated from the home office. And it's not exclusive use home office because I also use the home office for personal things. So unfortunately, IRS is a little bit strict about that. Okay, so the home office must be exclusively used. So it cannot be like, hey, I've got like this nice bedroom and I've got a desk right here. And you're probably, when you take off your clothes, your bathrobe, you put it on the office chair, that's already personal use, right? But if you got like an exclusive office in the corner of your bedroom, it's kind of nicely like cut out and just over there, we could make a case for that, right? But no, it's got to be an exclusive use. Next question.
Life Caddy.
Life Caddy, say hello in the chat, Miss Life Caddy. I think it's Miss, right?
It is a miss because her question involves her husband.
Oh.
Can I use my husband's truck for my escort business, and can it be a legitimate business expense?
So, remind me your name, please. She said husband has an escort business, right? No, she has an escort business. So.
Wait, I lost it. Yeah, it's an escort business.
Okay, husband has a truck. And we have a question from Life Caddy. She said, hey, I have an S corporation. Can I take my husband's truck, use it in my business, and deduct it as a legitimate business expense? The answer is yes. Okay, now we got to figure out how much of the truck are you using for the business, because the portion of it is written off, or did you take the truck away from him and put it into the business and want to make it 100% tax deductible? There's also a strategy actually about that as well. So, having that truck, putting it into the business and making 100% tax write-off as long as it's being used 100% for the business, or are we writing off a portion of it? The point that I'm trying to make is that the truck, and I've did extensive videos on it on YouTube, does not have to be in the name of the business in order for you to take the write-off. Next question.
Follow-up from Erin. Follow-up on distribution.
Yes.
Do those distributions need to be through payroll or just a check written from the business?
Great question. So Erin asked a question earlier. Boris, when and how do I take distributions from the business? Do I have to take it on a monthly basis, on an annual basis? The answer is, we already answered that. Doesn't matter how. Just document that you had a meeting with yourself, right? If you're the only one running the business, how those distributions will be made. Now the question, this is Erin, right? Mm-hmm. Erin is asking, Boris, do I need to make distributions through my payroll check? Like when I'm processing payroll, add a line item, write distributions, and the softwares, most payroll softwares know it's distribution, or can I just take money out from the business? Either or works. I don't care if you sell yourself, wire transfer, write a check through payroll. Just the thing with payroll, for those of you that are interested in doing payroll or want to do it through payroll, just make sure that you enter it as non-taxable payment, right? Pay type, which is distribution. Because if you accidentally mess something up, then you're going to pay payroll tax on that and so forth. I try to avoid doing it through payroll. Even for myself, I have an S corporation. I take distributions on a monthly basis. I have like a consistent amount that I take, and I take it like what do we take it by monthly, right? So just being transferred, and it's a bank transfer. That's it. I don't complicate things. You've got to run payroll and this, keep it separate. That's it. Set it an auto payment. Done deal. Next question.
Question from Mark. I placed a large truck into...
Wait, you said we had some bad comments. Can we read them?
No, I don't. I didn't say we had bad comments.
Oh, I thought you said somebody left a miss. Why are you
talking? No, they're showing love.
Why are you talking bad about people over here that are watching?
I love you guys.
Huh?
I love the energy that we have.
All right, let's go with questions.
Okay, I placed a large truck into service in 2018 and 179. 95% of the cost. In 2019, 2020, 21, and 22, the bus we used was around 80%. since it has been 5 years, what happens if my business use drops below 50%?
We talked about this in one of my YouTube videos. Section 179. Mark is asking an excellent question. Everybody say great question, Mark. Okay, Mark, say hello in the chat. So Mark's saying, Boris, I bought a truck. I saw this YouTube video or an Instagram reel, and some dude came up and said, hey, buy the truck, write it off your business, take a Section 179. So I did exactly that, Boris. I wrote it off 100% or 95%. But the business use of my truck the next year dropped. What do I do? Unfortunately, whatever you're not using as a business expense, right, because the business usage dropped, but you took a deduction for it, there's something that's called recapture. Now, there's certain formula involved in it and the preparation. You definitely want to speak to your tax advisor how to handle that. Definitely want to find ways to actually make it business use, okay? You don't want to pay back taxes on it, whatever that may be. There's some consequences on it, okay? Is it the end of the world? It's not the end of the world, okay? But we do have a video. I think I did the video, how to write off my dream car. I think that is where I explained this particular scenario. I went into much more detail what you're asking. Next question.
Question from Jason.
Hello, Jason. Say hello in the chat, Jason.
I think he's piggyback on the previous question.
I don't care if he's piggybacking. Say hello again.
Doesn't 1099 imply she's only a contractor, not an employee?
Yeah, that's correct. But I didn't understand. When somebody says, I am employee, I assume, well, okay, maybe she's a W-2. Because sometimes people don't even know if they're 1099 or W-2. They're just getting paid. So I needed to clarify that to actually answer the question properly. But thank you for keeping me on track. Next question.
Craig is asked.
Hello, Craig. Say hello in the chat, Craig. Put a heart, put a like, put an emoji, whatever you want. I don't care.
Tennessee has a 5% excise tax on sale of the property if I own.
Oh, I thought you were talking about S corporation. Oops. Okay.
Tennessee has a 5% excise tax on sale of the property if I own it in an LLC. If I own it personally, there is no excise tax.
Oh, comment. Thank you for the comment.
Oh.
Next question.
Okay. Ashley says,
Wait. We've got more people joining, so I think we should stop for a second. Guys, anybody that participates the most today, we're picking 2 winners, okay? And I'm going to throw something in. I'm going to throw in a curveball. Ooh, you guys are going to love this. I was waiting for this. Winner number 1 is going to get a beautiful booklet, S Corporation Tax Secrets book. I got a third prize, by the way. And winner number 2 is going to get Thinking Outside of the Tax Box mailed to you. And winner number 3, but you must have a business in order for this, in order for you to actually exercise your price. Winner number 3 is going to get a 3-year look back, free, from my firm, where a tax advisor is going to review your tax returns for business and personal for the past 3 years. And be like, hey, these are the things that you can do to start saving money on taxes. And by the way, we found something that you can amend the returns. Now, do I guarantee that we can find something to amend? No. Everybody's situation is different. But we have been very successful with some people where we found some things, got them refunds in tens of thousands of dollars, Mark. So what you have to do to get a 3-year look back today, just ask questions. Dang, I wish somebody was giving me such a giveaway. Ask questions. Mariana's going to pick the winner. So in case everybody else is mad, why am I not the winner? You can be mad at it. All right, next question.
Question from Mary Ann. Not Mariana. Mary Ann.
Mary Ann. All right, guys, we have a hard stop today at 12:55. We can't go until 1 o'clock today because I have another meeting I got to attend to. We're going to start picking a winner at 12:50. Okay? Cool.
Okay, what deductions I can deduct in my LP or LLC that I can deduct in my S corp? Oh, what can I not deduct in my LP or LLC that I can deduct in an S corp?
So, Marianne, I don't know if you were here earlier. Somebody asked the question, hey, I'm a 1099. What expenses can I deduct? The answer is it doesn't matter what entity you have. As long as you're running a business and these expenses is for the purposes of that business, whether directly, indirectly, then you can deduct them. LLC, LLP, S corporation, sole proprietorship, C corporation, you name it. Okay, cool. Next question.
Jason, he's in the lead. If I do
Jason is in the lead?
Mm.
Woo! We got to put the names. We're going to pick out the winner one by one. Those three names. Who's number one, who's number two, and who got the 3-year look back. All right.
If I do qualify as 1099 Section 530, am I unable to take advantage of deductions from my accountable plan, medical, or retirement plans? I heard that officers cannot get those benefits.
Okay, again, this is with the sections, man. I know I look like a genius. I look smart. I wear these geeky glasses. Well, these are not geeky, by the way. These just make me look, I don't know, fancy, right? But, all right, I'm not really sure about Section 530. Maybe I should know that. But the question is, can I take advantage of deductions from my accountable plan, medical, or retirement plans? Okay, so let's just, all right, James, you know what? I have a follow-up question. First of all, if you know what Section 530 is, put it down. I don't want to look it up right now. Number two, let me know what is your entity type, and then rewrite your question. When we get to it, I promise I'll get to it so I can properly answer it. Next question.
If a husband and wife are the members of an LLC, does it have to report as a partnership or just Schedule C?
Ooh, that's a good question, right? So I love that question. So I'm actually, all right, let's talk about it. Cool. Who asked the question?
Tim.
Tim, say hello in the chat. Okay. Tim is saying, Boris, husband and wife. Okay, husband and wife. So husband, wife. We run a business together. Do we have to file Form 1065? For those of you that don't know, 1065 is a partnership tax return because now they're considered a partnership. Now, in some states or most states, whatever that is, based on your state, they could be like, listen, just because you're a partnership, you're still a one unit, like a one individual. So that's okay if you file Schedule C. And IRS is actually also okay with it. Because what happens is that when you file a late 1065 return, a partnership return, IRS will send you a notice, hey, you're late. But then you're like, oh, and it says exemptions are husband and wife, because that's fine if you did, right? So to answer your question, is it a must to file a 1065? No. And if you do file a 1065 with an accountant, he might charge you extra money for filing an extra return. But here's the kicker, and I want everybody to listen to this. There's two types of filings, right? If we, in this situation, one is Schedule C, and pay attention to this, Tim. Schedule C, which is sole proprietorship. You're saying, Boris, should we file Schedule C, or there is a 1065 partnership? If you work with an accountant, they'll probably charge a couple of $1,000s to do 1065. Now, if you're like, Boris, I don't want to save $2,000. I'm going to go with Schedule C. IRS audit rates on Schedule C are here. On partnerships, 1065s is here. Way, way higher on Schedule C. Why? Because with Schedule C, you don't have to report the balance sheet. IRS no likey, okay? They're like, hey, I want to see the balance sheet, okay? With Schedule C, you don't report the balance sheet. The audit rate for Schedule C is much higher. So with us in our firm, when we're doing tax planning and advisory for our clients, husband and wife, partnerships, whatever that is, all 1065. Even if the a client wants to start a new business as like an S corporation is not a good entity for him, with our planning strategies, we're like, hey, can we make your spouse 1 or 2% partner in the business so we can not file Schedule C and do 1065, avoid higher chances of audit? Guys, I'm telling you, please work with your tax advisor. Don't rely on an accountant that puts the right numbers in the right boxes, and that's it. Remember what I told you earlier. Accountants during tax season are dealing with millions and millions of numbers. They're just inputting it to get it done. Even the inputs are wrong. Why? Because they're being rushed through it. It's not entirely their fault, okay? We have deadlines. Entire America needs to file taxes by 4/15, 3/15, 9/15, and 10/15, okay? There's just not enough accountants. So remember this next time you work with an accountant. Instead, with a tax advisor. Next.
Aaron, love these here weekly. Just had to say.
Hello, Aaron. Aaron, say hello. Do the heart. Do whatever. Share this video with other business owners.
Ashley, I'm leaving my 1099 job to be an agent for State Farm on the 29th. It's a W-2 job. Am I able to set up my own LLC and deposit my checks into that account to extend my write-off?
Wait, I heard the word W-2, so I got confused. It's like I was walking, somebody put a stop link block, and I fell. Let's read that again.
I'm leaving my 1099 job.
Okay, so let's establish. She's currently at 1099 now, right?
Mm-hmm.
Okay. Next fact.
To be an agent for State Farm.
So she's going to be an agent for State Farm. So she's leaving that job. Okay, agent for State Farm.
That's a W-2 job.
So agent for State Farm is a W-2 job? Are you sure? Okay.
Am I able to set up my own LLC and deposit my checks into that account to extend my write-off capability?
So Ashley, if you're a W-2, you cannot set up an LLC and put the money in there because they're going to take out all the taxes. You're no longer considered a self-employed individual. You can't take any expenses. But when you tell me a keyword such as agent for State Farm, do me a favor. Get a clarification from them. I do not think they're going to pay you a W-2. They pay you commission. And from my experience, all agents get a commission. In that case, yes, you can. For all the questions that you asked about setting up an LLC, putting money, depositing checks there, taking write-offs, and so forth. Next question.
Richie, what is the risk of electing to being an S corp at low income levels? Are you not able to take a lower reasonable compensation? Are you forced to pay yourself reasonably, even if low income?
No, Richie, that's a great question, right? By the way, say thank you, Richie, for asking that question. Richie, are you here? Say hello in the chat. Okay, Richie, check this out. Guys, I'm going to get geeky technical here, but I promise you, you're going to get this. And then after this, we're going to answer questions a little bit quicker just because we are constrained on time. So Richie is asking, Boris, why are you not recommending to become an S corporation when the profits are low? Like what I said earlier is that in my firm, we generally do an $80,000 profit. Then we recommend an S corporation, okay? Cool. So what I do is I want to explain this to you. So Richie's saying, hey, Boris, why is that? Why lower profit? You don't recommend an S corporation? Because Richie, when you become an S corporation, you have to pay fees for certain things. So let's first talk about that, right? So when you file an S corporation tax return, generally it's going to cost you about $2,000 just to file the tax return. Then you have to process payroll. Payroll companies, if you pick we use Gusto for all our clients. We love it, right? So I think they charge like $40 per month per one employee, if I'm not mistaken. So that's another like $480. Then you also pay state unemployment insurance. Most states, even you're the owner, they charge a state unemployment insurance. I'm just gonna go with New York State because I'm in New York. That's another $400, okay, approximately. So you're looking at about $3,000 in extra costs. Now, what is the reason that you want to become an S corporation in the first place? Honestly, the number one reason why business owners become an S corporation is to save money on self-employment taxes. So if your profit in the business is $80,000, let's just go, because I recommend 80, right? So let's go, you make $60,000 profit in the business. And you're like, Boris, I'm going to convert to an S corporation. So as a sole proprietor LLC, you would pay 15.3% self-employment tax on this. Okay, so what's a 15% of 60,000? I think that is 9,000. Am I correct on that? Yeah. Okay, that's about $9,000. Yeah. Okay, that's $9,000. Now that's not an S corporation. Then you're like, Boris, I want to be an S corporation. I'll pay myself $30,000 salary, low reasonable compensation based on the work that I'm doing. So now you pay yourself $30,000, and only on the reasonable compensation you pay 15%, which is $4,500. Okay, so you already saved $4,500, which is your question. You're like, Boris, I can save money even with a lower net profit. You're saving $4,500. You are correct, but now you've got to pay $3,000 in fees. There, Boris, I'm still saving $1,500, almost. In 2017, now, before 2017, I would not recommend having an S corporation with $80,000 profit. I would go even with a lower profit. After 2017, with Tax Cuts and Jobs Act, and a lot of accountants, by the way, don't even mention it. They're like, oh yeah, $50,000 profit, you can be an S corp. Baloney, okay? I mean, you can be, but it's not going to save you money. Because what happens is that IRS gave you, as part of the TICJA, extra 20% QBI deduction, qualified business income tax deduction. I talk extensively about it on my YouTube channel. There's a video with my face going like, right, with a QBI, right? Go check it out. Over there, The QBI rule said, we're going to give you 20% of your net profit as a deduction. What's the 20% of $60,000? $12,000 deduction. Now, if you go with this option where you're an S corporation, you get a $6,000 deduction. You lost $6,000, the difference between this and this. And if you're in 20% bracket, that's another $1,200 in savings that you lost. So now that's another $1,200, right? So it basically wipes away your $1,500 in savings. That's why I tell business owners, there's no reason for you to do this. That's why $80,000 is a sweet spot for us in our firm for the calculations that we have made for our clients, because at least with $80,000 profit, they can start saving about $1,500 or more on an S corporation, just because of that nuance of 2017 tax law. I hope this was helpful, Richie. Let me know in the comments if this made sense. All right, now we're gonna go a little bit faster. We've got a hard stop at 12. We'll do 12:52. We already have a list of winners. All right, cool. Let's go, Mariana.
Hung. First year S Corp. Question is on.
Guys, let's. First year S Corp. Big deal, man. Let's go.
Question is on Schedule K1, ordinary income or the difference between ordinary income and 179 deduction to be passed through to 1040.
Okay, what is your question? What's the question again?
Question is on Schedule K1, the ordinary income or the difference between ordinary income and 179 deduction to be passed through to 1040.
Okay, I don't see a question there, but I think I know what you're asking. So let's answer it, okay? So you're asking a very technical question. I am wondering if you are an accountant. Okay, the question is like this, Boris. Let's just assume I have $100,000 in net profit in the business. I bought a car or an equipment. It's $30,000. I took Section 179. Okay, but my K1 is still showing $100,000. Why is it not showing a net profit of $70,000? The answer is that on the separate line item of the K1, I don't remember which number of the box of K1, it shows separately stated items, $30,000 Section 179. When it flows through to your personal, it'll net itself out. Don't worry. Very technical question. Very technical. Next question.
Jason says, hey, okay, Iron, I have an S corporation, which is a trucking company, but don't give myself a W-2. I have a driver who I give a 1099. But when I do my taxes, I get a K that I report on my personal taxes. Is this?
No, you're correct, right? So this was who?
Iron.
Okay, Iron, you're also asking a good question, right? And so Iron says, number one, I have a trucking company. Number two, I don't take a salary. Number three, I have a driver who's a 1099 contractor. And number four, I get a K1 from my S corporation. Is this wrong? First of all, if you're an S corporation owner or a partnership owner, okay, K1 is basically a form. Think of it as a W-2, but it's not. It's a W-2 from your own business, so to speak, right? But bad association maybe. But the K1 reports all the income, net profit, or net losses from the business that needs to be reported on personal taxes of an owner. Now, Iron says, Boris, I don't take a salary, but I get a K1. Is that wrong? Everybody's going to get a K1, Iron. What's wrong is the fact that you're not taking a salary. Maybe you're not active in your business and you have other offices in the business. That is a different case. But if you are active, then you should be taking a salary. And your K1 will be net of salary. So let's say the profit is $100,000, your salary is $60,000, then the K1 will be the difference of $40,000. Another thing that I would like to question here is the fact that your driver gets paid at 1099. Is he really a contractor, or is he really a W-2 employee, which really becomes a federal and the state issue? More states are cracking down on individuals that are getting paid 1099 when they're supposed to be W-2. All right, I also see that we got some kind of a sticker from B. Smith. All right, that is a first super sticker from B. Smith. That's $3. That's going to buy me a coffee. Thank you. Next one.
Marianne is apologizing. She had to leave. Ashley Norris, if I rent my home out after we move in a couple of years, how will this work tax-wise? I don't know much about renting out homes other than from the insurance of things.
Are you talking about if you rent out your person? Read the question again.
If I rent my home out after we move in a couple of years, how would this work tax-wise? I don't know much about renting out homes other than from
Okay.
insurance and everything.
This is a long answer so that you can understand it. I'll try to really cram it down so you can understand it. Look, we have something that's called a personal residence exemption. That means if you live in a personal house, 2 years in your personal house, 2 out of the 5 years that you had it, okay, when you sell the home, then that exclusion, meaning say if you had a gain, if you're a single individual and you had a gain up to $250,000, that gain is tax deductible. If you're a married individual, up to $500,000 tax deductible. When you don't sell your home and stop renting it out, it's not a bad idea. Okay, not a bad idea. You start generating cash flow income. And if it's rented for way too long, for example, like over the 5 years or the next 3 years and so forth, there's nothing left for you to take that exclusion. And because if the home appreciates in value, there is some strategies where you can sell the home to an S corporation. Very, very unique strategy. I don't recommend taking this video and running with it. Okay. But definitely speak to your tax advisor to find the ways, because I don't know for how long you're going to rent it for. I don't know if you're planning to come back to a home and so forth. So definitely a lot of moving parts. But if you're going to have a big gain on this home, like if the fair market value of the home right now is higher than what you bought it for, you might want to speak to a tax advisor. Next question.
Okay.
One more minute, guys. We have a hard stop. I apologize if I didn't get to any questions.
Jason is saying Section 530 is employee reclassification.
That's what I thought it was. I knew that. Okay.
My industry is over 25% 1099 contractors, so I believe it would allow me to do that in my S4 as well, but I can't find accountants who know this.
I don't know either. I'm kidding. So employee reclassification. So you're talking about from a 1099 to reclassify them as an employee, I'm guessing. Oh, Jason, you know what? Come back next week with a much longer, like very detailed explanation.
I have an S corp. I'm the CEO/owner, and I work in the business. Section 530 is reclassify employee, where I believe I could state 1099 in my business.
Okay.
If I'm 1099, do I lose the ability to deduct?
Okay, great question, Jason. I got it. Okay, I got what Section 530 is. It's reclassification of employees. Doesn't apply to you. Don't get reclassified. You say it's a 1099. Can you deduct all the expenses? As far as I know, if you're a 1099 employee. And you get paid 1099, and you're a self-employed individual, and you incur ordinary and necessary expenses and are reasonable in the production of that income which you're pursuing, the answer is yes. Next question. All right, guys, I think we have a hard stop. We're going to pick a winner. I'm sorry if I didn't get to any questions. We do this every week live, every Thursday at 12 p.m. Eastern time. We send out a bunch of emails. If you're not on our email list, I suggest you get on our email list. How can we get them on the email list? I have an idea. We're going to give you a giveaway. You can just post the link to the 7 free write-offs. We have 7 free write-offs. I don't have it printed. It's a PDF copy of every business owner must know. When you get that write-off, we'll also get your email in our system. You'll be notified. Now, let's pick the winners. The first winner is getting the S Corporation tax book. Are these the papers?
Oh, yeah, but I didn't write the names on.
You didn't write the names. I don't understand. What am I paying you for?
I don't know how to multitask.
You don't know how to multitask. I know, that's the
one
problem.
thing at a time. You're like, I'm trying to keep up with all these tax questions.
Now you're blaming it on the audiences?
I love the audience. I love the questions.
All right, cool. Who loves the video so far? Say love. By the way, for those of you that are not subscribed, subscribe to my channel. I actually release a tax strategy video every week, or I try to every week, right? That really just goes into detail, implementation, and really how you can save money on taxes. All right, we got the names. All right, guys, I've got 3 pieces of paper here, okay? I'm going to mix them. Okay, mixing it. I don't see it. All right, I don't see the names. All right, the first person is going to get the S Corporation Tax Secrets book, mailed. The second person is going to get Thinking Outside the Tax Box, mailed. By the way, if you're a winner, we're going to put our email address. You have to email us because I don't know how else to get you information from YouTube. And the third person also needs to email us. You get a 3-year look back, but you must be a business owner. If you don't have a business, we can't review your taxes. Okay, that's the only thing. We'll review your business and personal taxes worth for 3 years, completely free. Get a 45-minute call with a tax advisor. All right, first name is right here. Who's getting the S Corporation Tax Secrets book? That is Richie. Richie, we're going to be mailing you a physical copy of the S Corporation Tax Secrets book. Congratulations. Can everybody say congratulations to Richie?
Woo!
Mariana, can you put the email where they can email for with their address? Boris.Musheyev. Yeah. All right. Mariana, what's this?
Aaron Titone.
Erin, you've got the thinking outside the tax box. Beautiful, beautiful. Congratulations. We're going to mail you the copy. And the third winner, can we do the drum roll? For a 3-year look back. All right, cool. That is not a cheap service, by the way. You're going to be talking with a tax advisor for like freaking half hour. Okay. Ooh, it starts with an A and it ends with a Y, and the second letter is an S, and it is Ashley. All right, congratulations, Ashley. You got yourself a free 3-year look back. We're going to email you the instructions, what the next steps are, where to securely upload your tax returns, a call with a tax advisor, and so forth. Thank you all very much. I will see you all next week on Thursday at 12 p.m. Eastern time. Thank you. All right. Well, I'm just going to wait until we end the live stream. All right, let's do it.